Okay, let's get started with our market insights for the week. Here for today's discussion is Randy Watts. He's the Chief Investment Strategist at William O'Neill & Company, an affiliate of Investors Business Daily. Thanks so much for being here today, Randy.
Thanks for having me back.
All right, so we had a really bullish signal last week. All the major indexes blasting above their moving averages. What does that mean for the market after a really choppy, volatile month in August?
Well, it means a lot technically. First, the S&P and the NASDAQ are now both above their 50-day moving average. During this kind of choppy time during the summer, that 50-day moving average had acted kind of like resistance. We'd really like to see that act as support now. So we really want to see both the S&P and the NASDAQ stay above that 50. If they were to have an immediate failure back below it, we would take that as a very bearish sign. But right now, technicals are getting more bullish.
Right, and along with that, a lot of leading stocks are breaking out of basis. So from IBD's perspective, seeing those leading names follow suit with the market is encouraging. But like you said, we would like to see things holding above this level, but the headline risk remains, even though we do have now a date set for the trade war talks. That's still a big concern out there.
Let me make one comment back on the technicals. It is significant. Both the number of sectors now above their 50, there's 8 out of 11 O'Neill sectors back above the 50-day. That's bullish. When we were going through this chop this summer, the majority were under the 50. The other thing that's changed is the breadth within the S&P 500. Right now, about 56% of S&P 500 stocks are above their 50-day, and 64% are above their 200. So that's bullish. Normally when the market's doing well and humming, the majority of stocks are above both their 50 and their 200. Now, like you said, there's still a lot of macro worries, right? There's the U.S.-China trade relations. There's the unrest in Hong Kong. Brexit is rapidly coming up to us on October 31st. There's some issues with the global economy. And then finally, next year, we have an election. So there is still a lot of uncertainty out there. And I think investors, while should be cautiously optimistic, we're really telling clients to add capital back to the market right here gradually.